sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video I'm going to be going over some analysis for Bitcoin, the SPX, XYO, Dogecoin, and the total crypto market cap, the one excluding Bitcoin. But to go ahead and get things started here, first off on this monthly chart, first thing to note is the black boxes. Those are bear market measurement tools towards the downside that are paired with these white dashed horizontal lines we see here. Going back to 2011 we see 94%, 2014 87%, 2018 84%, and currently 2022 we saw a 78% drawback. They're decreasing, or the decreasing of the severity of bear markets over time. So the bear markets are becoming less severe. The bull market's also becoming less bullish as well. Each time we broke above, once the price set its lowest low, for example, we used 2015 right here in this range. We set our lowest low. We built back up to the halfway point of the drawdown we had just got done finishing, and we can see each time, which is what is corresponsive to the black bubbles or the black circles on the chart. Every single time we closed above that line and then continued to close and then open above it continuously with strength. It basically validated really the full steam ahead portion of the bull market. For example, 2012 or 2011, that lined up with $7.98. 2015-14, $454. 2018-19, heading into 2020 was 7.8 thousand. And currently, right here within our range, we've been setting since around February 2021, basically beginning of 2021. You can see that number, a magic number specifically, is $32,673. But really, 33,000 seems to be the final line in the sand here with this pretty clear historical trend. So once we close above that and then continue to open above it continuously, etc., that will likely, again, be the same exact symbol that is 3 prior times printed on here. Going back to 2011, 2012, the vertical yellow lines that you see are pointing out confluences between the RSI we can see down here. Pretty clear picture. We hit the lower turquoise range. Once we do that, we will back up to, and it's specifically the vertical yellow lines are encompassing the tail end of the build up to, this descending purple, this lower purple line we see. Once we break above that, that essentially lines up pretty much precisely with the actual black bubbles up here when we flip that horizontal line with respect to the bear market drawdowns. The relative volatility index, it's really an oscillator. It's respecting pretty much the exact same range going all the way back to 2011. And we can see each time this also again is lining up, coinciding, finding confluence. 2011 we cross above, we see purple flip the yellow, bull market began, or 2012 rather, and then 2015 we see that same flip happen, bull market began. We see it happen in 2019, the bull market began. There was that kind of, obviously that led into the March crash. We didn't set any more lower lows, so essentially the bull market began. Then right here for the 4th time, we got that cross February of this year, which is the second candle, really the first candle we printed that showed strength in this, what I would personally say has been a bullish split up leading into the next bull market. But the big thing here really is this MACD. And we saw the momentum flip July. We are continuing to show that strength leading into August. I believe we will continue to do so. Again, this is the monthly chart. This is the monthly MACD flip. That's very important and very good to see overall, and especially the longer term sense of everything. But if we take a look here at these specific projections I have, again, for those of you familiar with the content, the turquoise pattern is what I have been, is my personal idea. That's where my bias leans towards. That goes back into, and I'm not going to elaborate it too much on this video, but the first, if you're new to the content, you haven't seen it, the first 2 cards at the beginning of this video will have me more in depth, in detail, elaborating and explaining my phase cycle theory, to give it a name, of Bitcoin's progression from when it came out to now, just analyzing it overall in the macro view of things. But the purple pattern is secondarily what I see, because as I've mentioned on this channel many times in the past, the most recent bear market we had, starting from April 2021 leading into, you know, November, December of last year, compare that to December of 2013 to, you know, the end of this bear market around February, March or so. We set that first and that final low, really we just ranged sideways basically. Harmonic wise, the way that the price formed in terms of waves towards the downside was essentially the exact same. And we can see here with these measurement tools, I have each of these 7 bars each. If I do that same thing and I clone this and I take it back, I take it from the lowest candle close, takes us out to right here. So this purple pattern is from this point onward right here, April 16th to the high we set in January 2018. That's the fractal pattern again, that's the purple one. Where we would continue to pick off from there, you know, given, like I said, the bear market is the exact same. Essentially, if you think about it, it looks a little different, but for the most part, it basically formed an initial downside and then 2 M's towards the downside, as I've gone over in past videos. But overall, generally, I don't think that no matter which path is taken, purple or the pink being worse, and the pink is actually what I would say most people, a lot of people are entertaining it, but I would say most people are entertaining it because of the way that the halvings have traditionally occurred, with them preceding or being shortly after really the bull run really began and the actual low was set. We see bullish behavior after every single halving. So what the pink pattern entails is that we don't even have to go down like this one is a little bit, or even sideways. Even technically the purple pattern is a variation of the pink pattern or vice versa. Basically, what most people I would believe are seeing right now has happened is that we'll basically go sideways, maybe slightly upwards or slightly downwards leading into the halving. Once the halving happens, then we'll finally begin to pick it up, and that will likely, in my opinion, put the top being in the upcoming bull market more towards 2025 instead of being next year, or really as early as the very end of this year, leading into next year. More personally, what I see happening overall, like I've been saying, I think it's 220,000, give or take, like $10,000. But I would say the longer we take to reach the high is going to slowly but surely push up the overall high. Like, for example, if we top more towards end of 2025, I think there's a possibility we could push to 300,000, 350,000 approximately. But like I said, I don't think that's going to happen personally. I mean, it could. I mean, obviously, I don't know what's going to happen. Anything can happen. But so finally, I wanted to specifically point out the 7 bars pattern I have down here. As I was mentioning on a weekly chart, one of my recent videos, how there's that bar pattern or measurement tool, 30 to 32 bars. On the weekly, it was when we finally got the candle closed above this. So for example, in here, what I'm talking about is going to the weekly chart. In August, we set a local top back here, August 2020. And then we can see right here, the October 2020 is when we finally closed above that August candle. And we saw that on the weekly chart as well, but that kind of built up into the monthly. Now we see it happening here on the monthly, which is obviously even better than it happening on the weekly chart. Again, we're seeing the same time measurement, 7 bars to 7 bars, identically happening basically. So if this ends up carrying out, we could possibly see a move corresponsive to that. So we're on the 8th candle. This was the 8th candle, moved 72% towards the upside. We're on the 8th candle, like I said, 72% to the upside would take us to basically 49.3, so basically 50,000. Later on in the video, that will begin to make more sense, but just remember that for right now. Here quickly on this weekly chart, again, we see this ascending support range we've been using since 2017. Right now, I would say bottom of the barrel, look out for more in the medium terms, 24.7 and 31.8. So really 25,000 and 32,000 approximately. If we break 32,000, again, that's basically 33,000. Obviously, like I said earlier, that number is also very important. Essentially the same thing here, roughly, obviously. And the lower bound being basically 25,000. That's when we reached at the local low back in June of this year. That's when we hit the 200 estimated moving average. Right now we can see the 200 estimated moving average. Zooming in here, the white moving average, the turquoise is the 50 estimated moving average. We could, come down and test that once more. Again, that's creating range 20, basically 25.6 to 26.9, so 25 to 27,000. The lower, the actual, the cloud here, the purple cloud is at lows 23.6. I have been like if we lose 25,000, 22.5 to 23.5 thousand is where I'd be looking at. And if we lose that 20,000, if we lose 20,000, like I've been saying for quite some time, that's not going to be good at all for maintaining a bullish structure. I mean, even if I go back to this chart, this pink pattern basically finds support for many months on 20,000. And I don't know if I've said it yet, but I mean, bear, like lowest bare minimum, bottom of the barrel, 20,000. As long as 20,000 is held, I don't think we are essentially we've entered into a bull market. But let's see here, for what I wanted to go over on the MACD for this chart is, we can see here, we have this build up period, see 3 downsides, pink areas, building up with a positive slope. The price was negative, so we see bullish divergence there. We'll see that. So the same thing leading into the March crash, and then we had this minor pink blip right here. So obviously, clearly, as you can see on here, I'm pointing these out, very similar. We go back to 2014, 2015. Like I said earlier, the bear market and our bear market most recently compared to 2014 to 15 are very similar. This is also looking the same. We see this bullish divergence right here. The price continued to go down over this period that I'm pointing out on the MACD. And then right here we had this minor pink blip before the actual bull market began. I didn't really point it out in here because it looks kind of ugly, but essentially the same thing happened leading into the 2018-2019 low, when we saw that minor bump up to like what was it, 14 or yeah, 13.7 thousand roughly. And then just quickly, it's essentially the same idea as the RSIs I've gone over on the other charts, but you can see that we're in this basically neutral zone roughly. We are seeing that after we built up from the dark blue portion. That is literally the exact same thing we've seen for every macro low going all the way back to 2011 as well. So here on this 2-day chart, this is probably the most important chart in all honesty I'm going to go over in this video for Bitcoin. There's a lot on here. So first off, the first thing I want to go over is this purple curve that we see. The center one is the one that I used, and then I duplicated it or cloned it twice to create an upper and lower bound to create a form of a range. And you can see here, we see these 3 green dots right here. We see these 4 green dots right here leading into the low we set back in June of 2022. And then we see these 5 white ones right here. So first off, these green ones right here, you can see bull market top 60 leading into 64,000. We got a bearish divergence right here. If we were to look at the RSI, then we began to dump. But nonetheless, this curve has obviously been very important. And what I just find interesting is, so with these measurement tools down here on the bottom, basically just to sum it up quickly, we're right now lagging about 46, so 40 to 50 days behind the current build-up. As I mentioned on that monthly chart, how I had those 7 bars patterns. This is what I'm talking about right here. So again, according to my projections, I think we're going to see a very similar bull market as we did most recently from the March crash to 64,000. If we take the measurement tool from the lowest candle close and we build out 103 bars, that leads us to the end of that build-up period. That is exactly what we saw. It takes us right, literally on the dot to the candle, the lowest low we set right here, being the 4th touch point of this ascending black dashed range, which again, this is probably the most important thing, in my opinion, I'm going over in this video, because we are essentially seeing here an 8 to 9 month, roughly, ascending trend zone going all the way back to the final double bottom we set from November last year to January or December of last year. It bled into January this year, but we can see this clear. We set this double bottom right here, and then we've been going up ever since. So now we're about to hit it for the 5th time. Technically, we are zooming in here. We can see we're right on top of it. We haven't really entered it yet. We are, let's take all these drawings off, forming you can see, look at this candle right here. As I mentioned with the Heiken Ashes in the past, if we see a very small body with volatile wicks towards the upside and downside, likely something big is coming afterwards. I mean, that could be towards the upside or it could be towards the downside at this point. I mean, we could, after that, we still have 17 hours left in this candle. Like for example, once this candle closes, it could basically, close looking like this roughly. And then this next candle is just going to be a massive full body candle down to, the bottom of this range, maybe even seeing it go down around we're wicking down around 27,000 at the lowest. But you know, for all intents and purposes, I mean, there's really no reason. I mean, right now it's kind of like if you want to look at it as a short-term DCA type of option. I mean, if you started buying as soon as it hit it right here, obviously this would have been great back in November of last year. You bought again right here, January, great. Would have been a fantastic buy. And obviously, I mean, this is very solid. Obviously, this isn't financial advice, but that's really nothing to look over. So if we end up breaking upwards, the turquoise pattern we see on here is synonymous to the one I showed on the monthly, but this is just a 2-day version of it. And what I find interesting is that again, like I said, the center curve is the one that I drew first, and drawing it out to, according to this delay we're having in about 40 to 50 days, it puts the high, if it factors in this in towards March of next year at earliest. I could see it happening very end of this year, like the last week of December. So right now, I'm personally looking at a range for what the high to be set from December of this year to March of next year, unless we end up lagging behind more, or obviously my specific projection doesn't actually end up falling through. But I mean, looking at this curve, a lot of people might say, well, I mean, we're breaking it. We didn't break the curve to these first 4 white dots, but now we are breaking this curve. So, I mean, a lot of people could look at that as, oh, well, we just basically lost this oscillation. Basically, it's been having some sort of respect to this curve pretty clearly. So now we've lost it, so we're going to enter some sort of significant downtrend. I don't think so. Personally, the way that I'm looking at it is that this is kind of like, it needs to respect this curve, and now we're seeing it kind of deviate a little bit. It's similar to these highs we set right here. We deviated upwards a little bit, so we had to get basically brought back to equilibrium. So however much lower we end up going, or whether or not we go sideways, I think at some point we're going to have to, you know, obviously come back up to kind of continue to follow the general trajectory of this curve on here. If we look here on the RSI, what we can see here is, we look at the 786 zone, the purple or the pink zone. You can see for the most part, once we finally lost, so once we had 69,000 and continued on from there, we can see that we were suppressed below the 786. You can see right here recently we've significantly broken above it like we haven't in quite some time. We've been basically oscillating around it. So right now you can see the RSI is clearly not as low as it has been for the previous, you know, the touches on that 8 to 9 month ascending support that I mentioned. So I mean, like I said, we could have come down to 27,000 or so with some wicks, continue to see this kind of lower, kind of meet what it has in the past, but it's not necessary by any means. So we could eventually end up finding this bounce here. If we look at the volatility, it's also very low as well. So I mean, there's also plenty of room to see this continue to go up, cross a bullish cross, and then, you know, open up volatility towards the upside rather than downside. This is also another one of the aspects of why I think this is probably the most important chart that I'm going over, even though it is a lower time frame chart. The fact that those higher time frames basically support this, to me, is what makes this one so viable, because this is kind of, obviously it's a lower term, like it's clearly known that higher time frame charts are going to be more viable in technical analysis than a lower time frame chart. But the lower time frames find their really great utility in the fact that you can see things more obviously moment by moment rather than like a weekly by weekly type thing. But we can see here clearly this MACD has been converging and on basically zero. They have been building up, as I've been pointing out many times on the channel, we're building up all this pressure in here. We finally breaking out now, and we're testing what had been resistance for over a year at this point, and we're likely going to at some point break up towards the upside. So to show another example, we saw the same thing right here. We were oscillating within a specific range like this right here. Eventually we broke out and we came down and we tested it and we broke back up. I pointed out also in this one of my recent videos a number of weeks ago how similar, you know, this breakout right here as we're coming up and now we're making kind of this move towards the upside. Very similar. Obviously it's not the same, but it is very similar. Lastly, so for these boxes on here, so if we end up following this projection, this fractal pattern right here, with respect to everything I personally see happening, it puts the next run up to basically 50 to 55,000. I think more conservative to look out for basically 40 to 50,000. That is, this yellow box this lines up with literally the very center of the bull market high range we set, going basically starting from January of 2021 to when we lost it right here in June of 2022 at basically, approximately 32,000. Again, that number 33,000 popping up like I mentioned earlier. So whether or not we next move towards the upside and we just break into this box, or let's say we break above it like this pattern has and we find support above it, and then pretty clearly the last thing we need to set in stone is finding support along 64 to 69,000. So here for the SPX, as I've been saying, just to quickly sum it up, I think we are heading into the traditional fiat markets and indices, etc. are heading into the next 2008-like crash. There's plenty of news articles in the last year to two that have been saying that same thing as well. It may even be worse, etc. And we have been printing, going all the way back to June of this year, to our current time. We are now printed a triple bearish divergence. The last time that happened was the all-time high we set back in December of 2021. And then afterwards, after we printed that, we ultimately ended up going down to 27%. So let's say, again, like I said, triple bearish divergence. These are the two times it's happened, going all the way back to basically the near end of 2021. At least the most major times it's happened. Let's say we see a drawback of 27%. That is going to take us lower than, specifically it takes us to around 3,200, but that will take us lower than the low we've set at 3,400, 3,500 approximately. That will then obviously have us breaking through the 200 estimated moving average, the 800 estimated moving average, basically breaking every form of support. This ascending support I have on here, the yellow, or the white and the black lines. It would, depending upon when it happens, it would take us right here roughly within this area where my cursor is, hitting the what was resistance has been flipped into what I believe medium term support, and I think we'll come down eventually. We would end up breaking through this and continue to go lower. I think it's something like 50 to 60% is what has been projected. We end up having some sort of a 2008-like crash. So I mean, 40% is at 2,800, 50% takes us all the way down to 2,300. So 28 to 2,300, roughly, is likely where I do honestly see the SPX and what it is with respect to like the NASDAQ and the New York Stock Exchanges I've gone over before. I think it'll roughly line up with when Bitcoin tops out. Like I said, just roughly, not exactly, just within a general month range. And basically we're heading into the decoupling. We'll start to see when Bitcoin makes its highs, you'll see the stock markets, etc., kind of making, lows. They'll be decoupled from each other. Whereas from up until now, they've been essentially coupled, moving up pretty much roughly in unison. But if we look at the relative volatility index, you can see we're towards the upper range. We're also seeing that same triple bearish divergence. We are very close to having a flip towards the downside. And whether or not we end up seeing that 27% drawdown, whether or not, let's say we just come down to this, this area right here at the 50 EMA and its cloud, or maybe it's the 200 EMA right here, or the 800 EMA, whether or not we come down to one of those, or we meet one of these ascending supports that's been set in the past, I think regardless of what happens, there's obviously some sort of a retracement that needs to be made here, but I just personally believe that it's going to, we're basically setting a double top right now. We're at the second top and we're about to enter a very, very significant drawdown. But look at the MACD as well. We're also forming bearish divergence, and we have already seen the bearish flip on the MACD. This is just the daily, but still, that's pretty big to see. Overall, everything really seems to be pointing towards seeing some form of a retracement. One last thing I do want to point out is if we look at the RSI, you can see that we are, and obviously towards the upside here, we're roughly at around 82 at the highest recently, and 90 to 94, which is these upper two white dotted lines. This is the highest that it's ever gone, and going all the way back to the beginning of this chart. I forget when, but it's quite a few number of decades ago. So I mean, we're essentially within the most oversold territory that the SPX has formed throughout its entire trading history. And we are, I mean, if we go all the way back to the actual moment when we set the highest high, we are, RSI was at 65, and like I said, now we just at the highest hit like 80 to 82. So that's a hidden bearish divergence. If you connect those 2 points, obviously that's the all-time high to this hidden bearish divergence, setting in for a double top on top of the fact that there's already a bearish divergence with respect to the actual second top itself. I mean, that same thing can be seen on the MACD as well. We are pretty much right at the exact same area. Both of the MACD set its highest high at 68. That's where we just recently hit, forming this bearish divergence. Again, just doesn't really seem too good here in the medium term, personally. Obviously, I could be wrong. Here for this XYO update, I mentioned on my community tab that this is a very important update. I haven't uploaded a video in like probably 3 weeks roughly at this point, and last time I updated this was probably over a month ago at some point. But I think I think that puts us roughly back at like May or so. So it's actually probably been a while ago. It was when we saw this candle right here, this white candle with these volatile wicks, rather small body. I'm just pointing out how that could potentially, obviously, you know, as the Heikin-Ashi rule goes, could be starting to see the movement towards the upside. The RSIs were also looking very good as well. Let's take a look here at the RSI. Going back to that, we had roughly met, right here is when I was pointing it out back in around, probably it was May. Like I said, we had roughly met this area right here, you know. So I was like, you know, it's possible we could, you know, eventually move towards the upside here. This could be the lowest low we set. So far we've come down even more pretty clearly, and we've more filled out what we needed to see, in my opinion. So I mean, these are really almost within the exact same horizontal line. It's also clearly it's lining up with this area back here as well, which is what lines up with the previous lowest low we set back in January, February of 2021. It's also important if we go back to May of 2020, which that's what brings me to each of these purple vertical lines. You can see every single time we met it right here: May of 2020, January 2021, June of 2022, December of 2022, and then right now the lowest we always set was July of 23 this year, and we've begun to move up so far. And that basically is saying that we will see, according to all these measurement tools, to sum it up, we are going to see at least a 200% move. That puts us up to retesting this has been resistant so far right here, this upper black dashed bound. Or we could move around 380%. That would then break the resistance. Obviously, I believe this is it's gonna end up being similar to Bitcoin at the end of the day. Bitcoin looks great. This is finally really starting to show like I said in my community post, really reaching its final stages. We are also, let's zoom in here so I can see it good. We see this pastel blue candle. This is a bullish divergence candle. We actually have been seeing a triple, roughly, well, more so just a bullish divergence, but you can see each of these three lows have basically happened horizontally, whereas you can see this was significantly oriented towards the downside. So really it's just a bullish divergence. You could say it's a triple bullish divergence if you want, but this is the first bullish divergence candle that this XYO, this is a weekly chart also, by the way. It's the first bullish divergence candle that it's printed in its entire history. And I wouldn't say that it's any coincidence that it finally printed this candle after basically the third time, where we're going flatlined on the RSI, but the price continues to go down. So eventually at some point, it's going to have to break towards the upside. If we look at the volatility index, you can see, like I mentioned with that oscillator, looks like an oscillator on Bitcoin. Basically, you're seeing the same thing here. So I think as soon as we cross, we have this flip, this purple line flips the yellow line. We are very close. We came up to it and tagged it on the week of July 24th. Got rejected a little bit here recently, but I do think we are about to see that break. Looking at the MACD, this is the really big thing. You can see we got the MACD cross 10th of July, the week of the 10th of July, and Well, this is actually really a legitimate triple bullish divergence here we see on the MACD, which I would say is even bigger than what we can roughly see on the RSI. This right here is kind of like the cherry on top of everything, in my opinion. I think this is kind of screaming a very massive buy signal here. Again, it's not financial advice, but this does look very good, things considered. Just to quickly go over it, obviously I don't know where anything is going. All these are just, you know, conjectural projections at the end of the day, but I don't think XYO will go any higher than $14, but I do think it will go to at least $1. I think I've been saying around $1.50 to $3 is the lower range, and then around $6 to $8 is a medium range, and then a maximal range is like 9 to 14. There's many different projections going through other different you know, things I see in the chart, but those are the three ranges I'm looking out for. And $9 to $14 really isn't anything that's kind of too far out of the ballpark. I mean, according to get specific, it would take XY up to 0.000036 of a Bitcoin at whenever its high would be. Calculating that out, that's what creates the $6 to $8 range. So I'm personally eyeing $6 to $8 is the most likely. And, you know, just kind of go on a tangent here, I had a dream recently. Obviously, it's just a dream, but dreams can be pretty weird sometimes. That I was on my phone and I saw that my portfolio with respect to XY went up to $8 million. And if $6 to $8 is looking pretty likely, you know, with how many XYO I have, I just found that kind of ironic, because I had that dream, and then a few days after I had that dream, I was just going back over the XYO to Bitcoin chart, refreshing myself on it, getting it up to date, and it was still kind of putting a little bit more emphasis on that $6 to $8 range that I pointed out in the past as well. So I just found that rather ironic. So if I get to $8 million, even if it could look like it goes higher, I'm probably going to sell at $8 million. Anyways, that was all for XYO. Here for Doge. This one, each of these black dash trend lines you can see are basically the bear market resistance that eventually got flipped into support. Each of the black arrows are pointing to these points when we flipped this. So the vertical lines, there's yellow and turquoise. From yellow to yellow, it's 5 years. From yellow to turquoise, it's 2.5 years, so it's just half that time period. So what got me to drawing this out is that the break of this first trend, the resistance, was May 2015, and then we go to the next one that is synonymous to it, lines up right here. And this specifically, the low happened in March, but it's so close to May that I went ahead and moved it, so it's a specific 5 year to 5 year. Like I said, yellow to yellow is a 5 year interval. And then I halved that, and I found it's obviously not coincidental that it happens to line up right here, right before price skyrocketed back in 2017 to 2018 for Dogecoin. So again, I carried out from April 2025 years. That's this yellow line right here towards the far right of the screen. Then I took half of that, and it lines up right when we broke what has been resistance going all the way back to April, May of 2021. For all intents and purposes, this trend resistance back here that I'm highlighting, this one right here, and this one right here, or my bad, rather, no, this first one, this third one, those are essentially, cyclically speaking, the same trend line. And then also the second one right here and this third one are, again, essentially the same thing. Although, like I said, the cycles and the phases are lengthening, especially with Bitcoin. That's been clearly seen, but it seems to be factoring into the other cryptocurrencies as well. Right here, Dogecoin saw this ABCD, or this kind of lightning bolt pattern towards the upside. That is essentially what I'm seeing happening right here as well. Obviously, it doesn't look identical. It's not going to look identical, but it's going to look very similar, I believe. I think it could go as high as approximately $25, give or take, like $3. And then about $1 to $3. And I think it was like maybe like $8 to $12 is the medium term, or the medium range that I saw. So 1 to 3, 8 to 12, and then $25, give or take, like $3. And approximately $25 really isn't anything to scoff at. I mean, if you go back and like I said, these are comparable. These are the exact same bull run, but this one's happening later in Dogecoin's maturity, so it's going to lengthen, like I said earlier. The first run right here of this ABCD pattern were essentially identical. They weren't precisely the same in their percentage gains towards the upside, but they were very, very, very similar. And that is taking us up to $20 to $25 is what follows through with this being similar to how we built up from April 2020 to April 2021 for Dogecoin. We'll see the same thing here. Looking at this RSI, we see our oversold pink ranges right here. We've now built up. Once we finally cross 52 on this RSI, that's going to be something to look out for. And then crossing 71 on the RSI is also going to be something to look out for here on this weekly chart. We look at the MACD, you can see we've been getting bullish divergence. We've been converging towards zero. We recently got a bullish flip. I think this is essentially going to lead into actually flipping this 0 point right here and actually seeing a momentum move towards the upside. We look at the relative volatility index. You can see that we recently, going back to June 19th, look at that, June 19th, which is when we set the local low recently, around 5.5 cents. We saw that flip. Bitcoin continues to go up here. Maybe it goes down a little bit more, but obviously, in general, with what I think, Bitcoin is going to continue to go up. Likely, I mean, we could see Dogecoin. It's been doing a little bit better, it seems, than Bitcoin has been recently. If I take it down actually a little bit lower, if we go to the 2-day, I mean, really haven't gone down, I would say, as much as Bitcoin has, so seems to be performing a little bit better. Another big thing to point out is that you can see that we are, see these moving averages right here are essentially converging to 50 EMA and the 200 EMA. Once we finally break that, sitting at 8.083 to 0.087, so basically breaking 9 cents and then up to 10 cents right there is going to be something major to look out for, especially when we start to close and then open above that cloud. That's pretty much what happened back here for this bull run, as what happened back here in 2017 as well. So I mean, just to sum it up, I mean, historically speaking, this is going back to October 2022 was the 4th best time to buy Dogecoin in its history, essentially at its lowest lows. And going back here recently to June would have been the kind of secondary, is essentially at the lowest lows, but best time to buy it. But nonetheless, if you basically haven't been dollar cost averaging in a Dogecoin since October, you've been technically doing it wrong. I mean, if I go back to Bitcoin here, real quick, I mean, if you haven't been DCAing into Bitcoin since as early as June, even though it continued to go down lower, you've been kind of doing it wrong. I mean, like, if you, yeah, like I said, I mean, it went down from June to November from around 20,000 to 15,000. It was about a $5,000 deficit. But the point is, I mean, if you were DCAing this entire range right here, you were buying the absolute bottom in terms of a range for Bitcoin's price. I mean, that is insanely smart. Like I said, yeah, the price is going down, but you are DCAing the absolute bottom range for Bitcoin. I mean, you can't really get any better than that. And then obviously it would have made up, because once we reached that 15.5 thousand approximately, now we're up at most 100%. It would have been a profit on literally everything if you started buying in June of last year for Bitcoin. And again, like I said, saying essentially the same thing, slightly different time periods is what Dogecoin is saying as well. So lastly here for the total crypto market cap, I'm going to keep this one simple. These trend line ranges, these zones you see here, are essentially also the same thing. So we'll point that out here. Basically what we're seeing is, so we see this move towards the downside. See that? We see this move right here towards the downside. What we're seeing, just to draw it kind of more simply, is an initial downside. Then we see 2 M's form. We see 1 M right here. And then we see the second M form right here. I've went over this many times on Bitcoin and in this channel in the past. We're seeing the same price harmonics right here for these bear runs. We are also with where the black arrows are pointing, synonymous once we finally start to close above this cloud, which currently sits at 685 billion. Again, this is everything but Bitcoin. So this is whenever this starts to, like I said, close above and continue to open above, really we'll just say 700 billion, but 685 to 700 billion. Once that starts to happen, then the altcoins are really going to take off. Here more in the shorter term, looking out for 600 to around 620 billion. Once we break that and continue to break like the higher ones that I mentioned just not too long ago, it's really going to come around full circle. I mean, looking here at the RSI, Nothing too much to explain. It's essentially the same thing I've been going over for every other chart. We've hit the lowest most ranges. Now we're building out. Once we see the RSI break above 65, this is the weekly chart. That will be basically major full steam ahead as well. If we look at the MACD, we're getting bullish divergence on the MACD as well. You can see that we recently just flipped it as well after seeing a very significant, or not significant, unsignificant pink blip towards the downside. Might cross it again, especially, you know, things could, I mean, these are altcoins at the end of the day. But I mean, overall, I mean, factoring in Bitcoin and everything, even though obviously like this is excluding Bitcoin, so Bitcoin doesn't really matter. But if Bitcoin's going to go up, then all the altcoins, obviously the ones that are going to survive, are going to go up with it as well. But that was really all that I wanted to go over in this video. Just to quickly sum it up, going back to this chart right here, again, like I said, 25,000, 32,000, and remember 33,000, like I said, very important numbers to be looking out for here. And like I said, 28 to 27,000 is a key number to look out for in terms of retracement, going back to this 2-day chart right here. But all that being said, everything gone over, I hope you guys enjoyed the content. Again, this is financial advice. This is meant to be educational. You're supposed to learn from it and then kind of develop your own trading scheme as you go on about gathering information from other sources, people, etc. But anyways, hope you guys enjoyed the content, and I hope you all have a blessed day.
Ooh, I'm regretting now, won't I see you forever, start to